another week, another trading cycles video. We're now in week 44 of the year 2023. My name is Eric, as always, and if you haven't already done so, please get subscribed, hit the bell notification icon so you get notified when we upload next. And also, if you like the video, click the like button. If you have any questions, put those in the comment section. Before we move on here, do keep in mind that we do not provide financial advice here. All the content that we share is intended for educational purposes only, and always trade to price and not to prediction. And a word over to you, Ormus. How are you doing?
I'm doing great, as always. Thank you very much for asking. I hope everyone else does as well. How are you, Eric? All good?
Yeah, not too bad, not too bad. Could be better, could be worse, as usual.
Yeah, as life and as cycles, yes, it goes up and it goes down. Yeah, all right.
It's a roller coaster.
Exactly. And at the moment, markets are having a bit, well, they have had better days, I think. Yeah, so that's doesn't look good, but that's kind of what we have been saying. Obviously, yeah, it's still negative and not looking good so far. The last week was quite a bit well, negative as well. Yeah. Although we have been achieving now some sort of targets, as we will go through them in a moment. But let's have a look first what we did say about the week ahead that has now passed. So seasonally, we thought it's going to be quite volatile. So we have seen ups and downs, yeah, and it was more to the downside, yeah, indeed. So that's what actually happened. So the second half of the week was quite negative. And our statistical model did kind of suggest that obviously it might be negative on Tuesday and on Thursday. And Friday was so-and-so, yeah, kind of 50-50 here. So, and Qs were showing about same pictures, basically. Yeah, quite volatile, ups and downs. Now, 50-day moving average of the broad market is still in that 30% zone, so it's still in the negative territory. And interestingly enough, 200-day moving average of S&P 500 stocks came down to the 30% zone as well this week. So all the market seems to be quite oversold at this point. So as that will confirm that there's quite a lot of negativity on the market. So the risk appetite is not back yet, and there are no good signs at the moment that markets are about to turn. So the focus is still to the downside, yeah, at this stage. Sector rotation, obviously it's been quite a weird movement here, and at the moment that weird movement has been continuing. So those guys who were heading to the green zone have turned around and going down, and those guys who were heading to the red zone did turn around as well, at least the communication sector and technology. So these are heading up. Energy is coming down, and the overall picture is very negative, as we see from here as well. So the past 5 weeks have been has been quite pessimistic there on all the sectors. Yeah, some of them less, but still, yeah. At the moment, technology is standing out a bit. Yeah, so only -2%. Whilst the others here, like utilities and consumer discretionary, have been more than 7% to the downside. Fear and greed. Last week it was on the brink of that extreme fear, and that has now materialized. So we are in extreme fear situation. So the scale is on 24 points, which is now quite bad, yeah. And astrologically, we have some plays here coming up as well in November now. This is a new month here. So the most important aspect maybe of the week is going to be on Saturday, when Saturn is turning direct. It's been moving backwards, so to say, for about 5 months, I believe, now. And now it's gonna turn, and that might indicate some sort of turning points as well on the market. So shall wait and see. But the other one which is coming up is exactly a week after that is Mars opposition to Uranus, and that's quite bad aspect, to be honest. If you look at past events on the markets, that has indicated very sharp declines on the market at these times, especially when the aspect is over. So something to be aware of. For example, 2007 or 8, that financial crisis started basically with that aspect as well. Yeah, so something to bear in mind. But we'll have a look more closely next week when we have some sort of idea where this week has been taken us. Now, important date is also the first, where we have another Fed interest rate decision coming out. So that's something to keep an eye on as well. Seasonally, we are still on upside, obviously, but not. It's not going to work all the times of the years, yeah. So not 100%. So that's something to be aware of. Now our 60-day or our decade cycle, I did update it as well for the month of November, and that one is indicating quite negative month ahead. Yeah, so far it's been quite accurate. So let's see how it's gonna work from here on. That picture obviously doesn't encourage too much. So yeah, nothing good still. And as I said, yeah, the price is indicating the same. Yeah, as we always say, trade the price, not the prediction. But yeah, at the moment these two are or have been going quite hand in hand. And VIX index is still in the danger zone as well. So just to be aware. Now, next week's seasonal tendency for spiders is also quite negative. Maybe the end of the week is going to show some positivity, but yeah, so far it's saying that it might go even further down to the downside. And Q is about the same picture here. Yeah? Now, our statistical model for the week ahead here indicates as well quite a bit negativity. Second half of the week maybe not so much, but still something to be aware of. We are in that very strong seasonal rally time, but yeah, that doesn't materialize all the time. So again, not always true. Now, last week we did see the ECB interest rate decision, and for the first time in a long time, they did decide to keep the interest now steady on 4.5%. Yeah, and the next Fed rate decision, as said before, will come out on the 1st. Yeah, so expectation is that it will stay on 5.5, but we shall see then. And quite a lot of unemployment information and job market information is coming up after, so on Thursday, Friday. Yeah, something to keep an eye on as well. Okay, so that's about it. Let's have a look at some charts as well. So the next month's turning points are still in progress, work in progress. So next week we will cover them for the month ahead. And at the moment we have one more turning point coming up this month, which is on 30th of October, yeah, for stock markets. Now, for gold, it's been quite strong market lately, yeah? And the last turning point last week did work quite well as well, only a day late maybe. And the market actually found its temporary low on Tuesday. The turning point was on Wednesday. Now the next one coming up is on Tuesday, the 31st for gold. Yeah? So, and Bitcoin was very strong on Monday, the 23rd. It rallied to 35,000 and then obviously gave up some, but not too much. And at the moment it's lingering there in between 34, 35. Yeah. So quite strong market, as our bullish indication did indicate quite a long time ago. Yeah, so that was known already before the month started. All right. Now, what else we got here? Let's have a look at the VIX. So VIX has been rising slowly. Nothing serious so far. Yeah, so it's been quite steady market. Obviously to the downside, but no panic. Just yeah, head to the exit, but no panic. Okay. So, we'll see if there's gonna be some panic coming up in November, as we did see that astrological signs are there. Yeah. I wanted to have a look at broader picture as well. So yeah, we did indicate here, if you remember, that was drawn a couple of weeks ago, or I don't know, beginning of month maybe. When we did come to that point here, we saw that price was quite close to that resistance line here, and then we indicated that price might start heading down again. And that's exactly what happened, and now it has reached its basically target. And one important thing that did catch my eye is that from this high to this low, if we draw a line, that equals almost that price movement here from this top to this bottom. Yeah, we're almost there now. So as the pattern says, it's A, B equals C, D. Yeah, and so A, B, C, D pattern. And yeah, that might indicate that we might see some sort of support, or at least the decline might stop at some point here. But we have to wait and see what sort of momentum we will get next week. Yeah. Now back to the charts. Let's have a look at what else. Yeah, the chunk bonds obviously have been on the decline as well as broad market. So there is no risk appetite still on the market. Yeah, so it did break out from that wedge pattern, and now it's been in decline. Yeah. All right. Out of those stocks that we have had an eye on, APH was the last one to obviously reach its target, and that has happened last week now. Yeah, finally. So that's now also closed. One of the new ones we would like to add here is FE, that's FESERV. And we're gonna look at the opportunities here to the downside, and entry positions we will have a look on Monday, tomorrow. Let's see where it opens and what sort of situation we are in. But at the moment it looks that there's more downside to come for this one. All right. So yeah, that's about it. Let's wait and see how it goes, what the Fed is gonna say on Wednesday, and what's gonna happen during the week.
Exactly. Let's see what happens and see what's on the horizon, so to say. Thank you very much, Hummus, as always, and thank you for watching and listening. If you haven't already, please get subscribed, hit the bell notification icon so you get notified when we upload next. Did you get a question? Leave that in the comment section down below and we'll definitely answer you. And if you like the video, click that like button and share the video with anyone you feel like might benefit from the information we share. That's it from me, and I shall see you next week. Bye-bye.
Yeah, have an interesting week. All right.